Hey, we're in the car. Jay's driving, so I figured I would do a couple. Um, well, not a couple. Normally, this sort of analysis I would do at home on my workstation, but we're going to be in the car for a little while running errands, and I'm not driving at the moment, so I figured I could just do a quick update. So, I already did an update a few minutes ago, a quick 5 minute update, but I want to get into this in more depth because I want to explain a couple of different scenarios and models and how it works. So, I've talked before, especially for newer people who might not know this, all technical analysis is what we do with charts. You're just predicting the future based on the past. You're identifying a pattern and using that pattern to predict what's going to occur in the future. So, say the 100-day moving average on Bitcoin, every time the price comes down from up high and it hits that 100-day moving average, it makes a big bounce back up, and that happens 9 out of 10 times. Well, what that means is you have a 90% chance of making a nice profit if you buy whenever it comes down and it hits the 100-day moving average, right? Now, in theory, you only need more than a 50. So if you have a 51% chance that you're going to be right, then you're going to win more times than you're going to be wrong. You're just playing the odds. It's just the basic statistics, right? So if 6 out of 10 times you get a big bounce when it hits that 100-day moving average, well, if you were to buy every time it hits the 100-day moving average, 6 out of 10 times, or 60% of the time, you're going to be right and you're going to make money. So that's all it is. You're identifying patterns in the past. So one of the ways you can do this when you have big events like a huge dump like this, there's really two scenarios that I'm looking at here. And you guys should look at them and see what sort of comparisons you can identify to see if there's a pattern and some sort of similarities that you can use to predict what may happen this time. One, I've already done several videos on. If you go back to March of 2020, when we first had Corona Mania and the stock market dumped and all different assets dumped, commodities, stocks, Forex, crypto, everything, you name it. When we had that dump and we hit all the way down to almost 3,200, the prior bottom from 2018, you'll remember if you go back, I did a couple videos where I explained exactly how it recovered with an initial bounce, then a retrace, and then a bigger move up. Now, what that is, essentially, if you're familiar with Elliott wave, is that's a wave one, a wave two correction, a wave three motive, right? And that starts that new impulse up of the larger impulse. So that subwave count is just a smaller version of the larger impulse, which eventually took us all the way up to all-time highs over $60,000 of Bitcoin. So you can look at that model and say, all right, well, that could happen here. And that's what this orange line was, right? So I did several videos. Again, if you're newer to my channel, go back and watch the last, I don't even know, 10, 15 videos I did that are like short, 5 to 10 minutes. Those were all really quick updates I did on these models since we bottomed out. And every single reversal little detail I've predicted so far has been damn near flawless. I predicted, if you look at this little circle right in the middle, there's a little orange circle above where that orange arrow line turns up. And I predicted that as we were moving sideways, we would dump at that line if we didn't break above one of my key levels, part of my what I call my Ichima model, Ichima dynamic model. So I said if we don't break above that Ichima dynamic resistance, we're going to dump at that circle, and sure enough, we did. So my model's been on point short term. Longer term, it's a bit harder. So longer term is pretty complex. I'm not going to get into all the details about why, but looking at the longer term charts, one of the things that you can do, since it's a little bit cloudy and it's not something I can easily analyze as well as I could short-term data, is look at those past events. So again, we had this situation in 2020 in March with the big dump. Therefore, I drew this approximation of this orange line. As soon as we hit that bottom down here and started coming back up, I drew this line and said it should look something like this. Not exactly, but something like that, if we do get the recovery. Now, so far, it looks like we're getting the recovery. This last dump, there's obviously some more FUD going around, and that's been pretty relentless. But overall, there is still a potential to recover and go back to all-time highs, or to at least get a larger bounce, which I'm going to get to in a second. If you break below the main support of 30K, that would invalidate this recovery play, and that's going to dramatically increase the probability that we drop into a 6 to 10 month bear market, similar to what happened in 2018. It took from the beginning of 2018 all the way until November. I remember because I was in the NICU when my twins were born. A lot of my friends and crypto Twitter and my group and stuff remember it well. I was in the NICU with my twins when the babies came, and we hit the bottom, and I missed getting in all the way at the bottom, but I had predicted 10 months in advance that the bottom would be 32.80, and I missed it by like $60. So my model's really great long-term too when the data is available. Right here, we don't have that much data. So I'm looking at those two events, the big dump in 2018 and the big dump which entered us into a bear market and the big dump in 2020. So if the 2020 model holds, we're going to continue upwards from here as long as we don't hit a new low. And if that were to happen, I would expect it to occur within the next 1 or 2 4-hour candles. We just started a new 4-hour candle here. This one still could be red as long as we don't break below 30K. And if it does turn green, there's a good chance this could be the next rebound up, and that's confirmed by my stochastic model. If you look at the stochastic oscillator all the way in the bottom, I've done several videos on this, and you follow bottom to top, bottom to top, bottom to top of that wave structure. Notice the price action similarly follows it. Bottom to top, bottom to top, bottom. Now we're going to go up again. So that's going to be a bullish reversal. But you got to wait till it turns up and it starts that trend reversal. When the Stoch is in a clear repetitive wave cycle like this, that's a pattern. You can use that pattern to predict the future. If every time we hit low and then high and low and then high and then low, we see the price go low, high, low, high, low, that means that theoretically you can anticipate the next move to be up and go up from here since the Stoch is turning up. Sometimes you dump and go hyper bearish and you just keep going down on the Stoch into that oversold range and the price keeps going down. That's what will happen if we break 30K. As long as we hold above 30K, we should get a solid bounce here. How big of a bounce is why we have to look back at the 2018 event. So when we had the big dump back in 2018, I think I could go back. I mean, the chart's going to be a little bit messy because I have so much stuff on it, but let me see if I can find one that's not quite as packed with crap. I should have other Bitcoin charts here. Let's look at, what's this one? This one doesn't seem to have that much crap on it, so let me drop back, and let's look at the weekly because that'll be easier to follow to go all the way back. So you can see, huge bull run up, big dump, right? Huge bull run up, big dump. We're also on the weekly chart, by the way, on the 55 EMA, which is one of my key dynamic supports. That's also huge. If we were to fail there, we go straight to 23 before we even make another move, and eventually we end up into the lower teens. Long term, it's not a big deal because we're going to stay above this cloud most likely and continue back to all-time highs, including 100K within the next year, year and a half at the most. But if we enter that bear market, it's going to take a while. So, again, if we were to see what's happening here, we have this big run up correction, big run up correction, final push up, a couple more pushes up. We lost momentum. Each additional little bounce was getting smaller and smaller till eventually we tanked along with a lot of the FUD that facilitated it, starting with Elon, continuing with China, and a whole bunch of other shit. So, let's go back. If we were to go back in time and take a look at what happened in 2018, here we go. So, see the same thing, right? Big, aggressive pump all the way up. Then you get that big dump, right? Then you get a nice big bounce, and then you get a big dump. A nice big bounce, big dump. So same thing. When you are on the way up, just like when you're on the way down, you get big moves up and then a correction. A big move up and then a correction. On the way down, you get a big move down, and then you get a nice little bounce like that. So on this next little bounce, we're going to get one of those. So you can anticipate the exact same thing with the current setup. Even if we are entering a bear market, we're going to have big bounces like that. Now take a quick look at what happened here. We had the price drop from the top about 20K all the way down about 50%, right? 46 and change. Then we had a bounce. That next bounce up from down here up to here was a 62% recovery bounce, right? Same thing with the one further down. So now if we were to go back and look at what we're currently seeing, if we were to have the same thing happen now, even if, and this is the important part, I hope people didn't leave early and are still watching this video because sometimes people don't watch them through, and this is kind of an important part I'm getting to. Hold on a second here. Okay, so if we were to go and look at what we're seeing right now, pull out and look at the daily, that'll be easier to show you. Oh, I have so much crap on here. Let's do this. Where's the option? They changed Trading View around. I don't remember where the option is to hide everything. There we go. Hide. All right. So now, if we look at the same thing here, similar situation, got that run up and then that big dump. My point is what I'm getting at, especially considering the fact that on the weekly model, we're sitting at one of my key supports, and we have that really strong support at 30K, which goes all the way back to this big dip here, right? So you had this move up on the left side of the screen, that move up, then we had that big dump, which was actually a pretty substantial dump. We held right at that 30K level. Final run up, slowed down, started to curve a little bit, had that rising wedge, and then dump right back to 30K, right at that same support. Since we have such a strong support structure here, this is the ideal spot for that same bounce. So since we had a 50% dump from the top down to here, just like I showed you in 2018, at some point, even if we are entering a bear market, and this is why I still have positions I haven't sold. I took a lot of profit on my longer term stuff. I got stopped out on my shorter term stuff. Some of my longer term trades that I was up 1,500%, 2,500%. Some trades I was up like 5,000%. It was nuts. Some of those positions, Key, VTHO, ITOX, there was a whole IOTX, there was a bunch of long term trades that I got into with my group. On those trades, I had a stop loss that took me out. I lost back a bunch of my profit on the big dump, but I still walked away with a ton of profit. So right now I still have a lot of trades open that didn't have that stop loss set. I have remaining positions. I've even entered some positions here anticipating this bounce. So what I'm looking at here, if you're currently sitting on some open positions, I wouldn't say we're entering a bear market. I would liquidate everything and get out, because even if you have to get out, as we're dumping right now a little bit more, even if you have to get out because we're going to be going lower, you want to get out at the right time. So if you're trying to figure out what the right time is, you're not going to want to get out right on top of support. We're just above that 30K support. So if this actually does bounce, there's two scenarios. We continue with the bounce upwards and we get a nice recovery run back to all-time highs and break 70K. Sure, that is possible. The other scenario, at the very least, is we get a big bounce just like we did in 2018. In 2018, we had an original 50% dump on that first dump. Then that next bounce was a 60 some odd percent recovery before continuing down for the next 10 months. So if that were to happen here, you may have the potential to get out at a much higher price instead of taking a loss now. I wouldn't sell now. If I was in your position, I'm not selling now. I'm going to keep my positions. Now, if we break below 30K, I might sell most of what I'm holding. I'll probably hold on to just maybe a position in. I have some Bitcoin. I'm not going to enter anything else new, but I have Bitcoin, Ethereum, Litecoin, and BCH. I got a bunch of the majors. I'll hold on to those a little bit longer maybe because they're in profit. And some of them actually are my recent purchases I'm down on, but overall I'm in profit because my overall average price obviously was 8 months ago, my entry. But if we were to dump below that 30K, if you wanted to exit then, fine. Get out, lick your wounds, take your losses, and don't hold it all the way down to the bottom. That's totally fine. There were a lot of people in 2018 that had the opportunity after that big 60% recovery bounce to exit the market, including myself and a lot of my friends who were around at that time. And we lost back all of our money because we didn't sell when we had that bounce and we held it all the way down. So that's why I think it's a bad idea to liquidate now. I would hold on to what you have. Keep in mind, there still is strong resistance up top that we can break through if we make that aggressive recovery run. But for that to happen, there has to be no FUD. There has to be positive news that comes out. I'm starting to think that's less and less likely, although from a technical perspective, I still see a very viable bullish model. I'm just not married to it anymore because realistically, anything can happen at this point, and with the amount of FUD we're seeing flood the market, it does seem like people want the market to go down. I think that when it eventually does go down, specifically when the 30K support breaks, you're going to see it drop extremely quickly because there are going to be a lot of orders there that have stop losses which get triggered and liquidations are going to occur, but there are big players who caused the initial dump and bought the initial pump back up. Those big money movers are going to exit the market if it falls below that support, and that's going to cause the price to drop aggressively fast. I still don't think that that's definitely going to happen, but it's certainly a possibility, and you always need to plan for all eventualities, and that's certainly one you want to have in the back of your mind. If you're holding, expecting the recovery bounce to continue like me, that's fine. I'm still bullish on that scenario potentially occurring, or rather, I'm still confident that that can recover. But as we go lower and approach that 30K, it makes me more and more nervous. The only thing that makes me a little bit more comfortable, and the reason why I'm not selling now, is that we're right at the bottom of the stoke. There's a really good chance we recover in the next one or two candles. We just need that 4-hour model to hold above 30K. So hopefully that clarifies. Two models, 2020 March, 2018 January, February, March, and all of that history can be used to predict what's going to happen next, and we have two scenarios that can play out. Shorter term, we get the big recovery play. Long term, we may be entering that long extended 6 to 10 month bear market correction. Be prepared for all eventualities. Don't get married to any model and avoid that bias. That's what I'm doing. That's what I constantly work on because I don't want to get over bullish or over bearish. You want to keep your mind open and make sure that you're not married to expecting one particular outcome. Be safe, trade smart. Catch you later.